How do global investors perceive India?
People have noticed when India sends a rocket to the dark side of the moon.
Do you think that gold will continue shining in the year ahead?
India has so many cards to play. The growing population is an advantage.
Hello everyone, welcome to the latest episode of Navigate with HSBC. I'm Abhilash Narayan and I'm an investment strategist at the Chief Investment Officer team with HSBC Global Private Banking and Wealth. I have with me today Mr. Willem Sels, who is the Global Chief Investment Officer at HSBC Global Private Banking and Wealth. Welcome, Willem, to the podcast.
Great to be here.
Let's move on from US to India, right? Amongst emerging markets, India is definitely an economy that a lot of people are excited about. It has advantages in terms of favorable demographics, favorable policy measures. How do you see India capitalizing on and gaining, its prominence amongst other emerging market economies?
India has so many, cards to play, and I do think that there is, certainly from a longer-term perspective, a lot of promise here in this country. Clearly the manufacturing is accelerating. The government has a very clear plan to have the Make in India activity pick up. Companies also have an incentive to come here, especially in this China plus one strategy where a lot of companies want to diversify. And what is helping as well is that the infrastructure is being built out, both the physical and then also obviously the digital infrastructure. So manufacturing, I think, is an area of acceleration, high tech as well, and then the mid tech, but also obviously from a consumer perspective. I don't have to explain the growing population is an advantage. You also have very well education system, and therefore plenty of high skilled as well as low skilled workers, which is very important to have both of those. And so from a consumption perspective, what it means is that there is more operational consumption and people upscale their consumption. So I think both of those factors are really going to drive growth in the medium to long term.
Thanks, William, and that's a fairly positive picture. And as investors, we know that inherently investors tend to have a home bias. And sitting here in India, it's easy to be excited about all these positive developments that you just mentioned. But I also want to understand how do global investors perceive India, and how has that perception evolved over the last 2 or 3 years?
It has evolved tremendously over the last number of years, and a number of sort of milestones are quite symbolic, right? When India overtook the UK as the 5th largest economy, it's a very important point that people have noticed when India sends a rocket to the dark side of the moon, and you see all of those Indian leaders in Silicon Valley. Clearly, India is being noticed much, much more on the international stage. I think from a shorter term perspective, foreigners have become a little bit more selective and a little bit more prudent on India, but I think that is a temporary period. That has to do obviously with the weakness in the cyclical data that we have seen in the short term. We think that the government actions on this and also the 2 rate cuts that we expect this year are going to start to stabilize that, and therefore we will see a stabilization on the market, potentially a rally later this year, but indeed from a shorter term perspective maybe a little bit more volatile.
So essentially we are positive, and global investors are also broadly positive, though there's been a bit of reassessment recently. India's love affair with gold is well known, right? So gold has emerged as a more important component of multi-asset strategies over the last few years, given the performance we have seen. And it's not just as a hedge against volatility, but increasingly we are seeing increased allocation to gold from various central banks across the world as well. Do you think that gold will continue shining in the year ahead?
We think gold has a place in a well-diversified portfolio. It is to some extent volatility hedging, but I would rather say it is tail risk hedging for extreme events out there, because we live in a relatively complex world, and this is obviously because of global relationships that a lot of the central banks want to own their gold. China stopped for a while, for a number of months, buying gold, hoping that it would go down. It didn't, and therefore they have again gone into it. So that tells you there is that systematic support for gold. That being said, it is obviously quite correlated to the dollar and to interest rates. So the view that we have that you will probably only get those 2 or 3 interest rate cuts and that we have a strong dollar provides some cap on the performance for gold. Nevertheless, we do think you need it as a tail risk hedge.